Well, joining us now from our Cape Town studios to unpack the fourth quarter numbers for the company is Mark Bristow, CEO of Randgold Resources. Mark, thanks so much for joining us this morning. Let's drill down into the numbers here. Gold sales for the fourth quarter increasing 20% and partly attributable to a 4% increase has been a 4% increase in the gold price has been that increase in that you've sold over the quarter. Run us through that quarter period.
I think the quarter, we always said we'd finish off stronger than the quarter three. Can you hear me?
Yes, loud and clear. You can go through.
Okay. We always said we'd have a very strong finish to the year, which we did. Not as strong as I would have liked because of the fire at Tongon, but apart from that, 4 out of the 4 operations, 3 very big performances. Lulo, Gonkoto delivering both on the quarter and the year substantial growth in production and in profits. Marilla outperforming even though it's near the end of its life. Very good delivery on the Kibali project, which is on track for first gold this year. And Tongon battled. We've had a tough time with Tongon and Ivory Coast just getting it up to design, and then we had a fire in the processing plant just before Christmas, and which hurt our production from that operation. But on balance, record profits, record production, and more importantly, something that's close to my heart is record earnings per share. So we're growing the earnings per share as well.
What's interesting, Mark, is that that's despite the fact that we've had total cash costs for the quarter under review having increased 27%. I mean, just how much of a pressure point is that at this stage?
Yeah, I think, from my calculations, it's 10 and 7 for the year. And that's relative to the industry, it's not a bad performance. Relative to our own internal objectives, we had a lot of pressure on costs again in the year. Some of it our own doing because we mined lower grade by choice, which impacted our costs. But on balance, as I was saying earlier this morning, we were able to move into the lower cost quartile of the industry, not because of us driving costs down, but because of the industry struggling with costs and overall rise across the industry in costs.
Mark, Mali has been in the news in South Africa with the AFCON football tournament. It's also been in the news, of course, because of some nasty violence in the country. Your management of your operations in that kind of environment where things are uncertain and indeed sometimes dangerous.
Yeah, I think, David, it's been a challenge, but operating in Africa comes with its challenges, and I think that's why I've always said it's key to have partnerships. It's key to be really on the ground, understand the situation. As you know, we worked through the crisis in Cote d'Ivoire year before last, and last year Mali dished up 2 big challenges for us: the coup or attempted coup in the early part of the year, and then of course the war at the end of the year. But and we have the M23 out of Eastern Congo we had to deal with. But at the end of the day, I think those are the growing pains of an emerging sub-region in Africa, and we still believe there's great opportunity. There's a lower risk profile today than there was 20 years ago when I started, and the reason that it's now at least attracting the international attention, particularly in Mali, which I think is fantastic, and it's encouraging to see the Malians setting a date for the elections, and for the international community, which had neglected that crisis for some time, really stepping up to the mark.
Of course, Mark, we know that your exposure is to Africa outside of South Africa's borders. How does that risk profile that you've just highlighted stand relative to the South African risk profile in your books within the mining sector?
The big problem in South Africa is the lack of a partnership between capital, government, and labor, which is the integral part of exploiting natural resources for the benefit of all stakeholders. And it's sad for me as a South African to see that partnership breaking down. And the the recent incidents in and around or sparked by the platinum industry, and it flowed over to the rest of the industries, saddened. And the reason we can manage in these often perceived more risky areas in Africa is because we have a strong partnership amongst us as industry and the governments and particularly the communities and our workers. And that makes it easier to manage. And people want investment. They want fixed direct investment. They want to create jobs. All the things that the South African politicians say, but sometimes neglect to act on.